we're not the central banks, and we didn't set up the system. And it may not be a terrible collapse. It might be a reset, which we discussed earlier. But I think what's happened is we've reached kind of peak debt and peak money printing as a solution to our problems. You know, in the early days, growing debt and printing money allowed for additional growth, and there was some inflation, but you could get by. And we've now reached that point in time at which the supply, the growth in the money supply has almost gone vertical. And there's a chart that will be posted with this interview about the M2 chart. And it just shows how, you know, as an example, in the GFC, we printed $3 trillion plus, and it took 3 or 4 years to do it. I mean, now we printed $3 trillion plus, and we did it in 3 months. And, you know, that's an accelerating rate of growth. And so I would suggest that because that second derivative is going up so quickly, you know, the next one's going to cost $10 trillion and then larger and larger and larger. And this is how inflations, which could become hyperinflation, get started. And so it's terribly unfortunate. It's going to be very painful, I think, for a lot of people. That's the bad news. There is actually a silver lining here and good news, and that is the system that's broken needs to be reset. And so I think that these things will drive a reset. And I think a reset will lead to a return to sound money, and I think that will be a better system. So it's not all bad news. It is, and perhaps I'm old-fashioned, but I think that the world did extremely well on a gold standard throughout the 1800s and early 1900s. And we even had a semi-gold standard here, although it was at a national level or at the sovereign level until 1971 when Nixon broke it. And sound money allows people to plan savings and get a return on their capital. Unsound money is I think, a system that allows people who run the system to benefit at the expense of others. It's called the cotillion effect. They get the money first, they borrow cheaply, and that additional money, I mean, printing money to pay for things basically is a form of diluting the money stock, and the people who get the money first are able to benefit, and everyone else suffers with higher inflation. Historically, sound money has always been gold because it's the best stock to flow ratio asset, and it's universally recognized, and so on and so forth. And so 5,000 years of history says that the best form of sound money is and has been gold, and probably will continue to some degree to be gold. There is a competing standard, which everyone's now aware of, and that is that Bitcoin specifically, and I exclude all the other cryptocurrencies, but Bitcoin specifically is a technological form of sound money, which is an immutable ledger, which I believe is as sound, or could be ultimately be sounder than gold. It's in the process of being adopted, which has positives and negatives associated with it, but it's come on the scene and become a real contender. And I think could end up being, the winner in a very long time frame. In the shorter time frame, I think they're both going to win. And so I've invested in both. And central banks are going to try CBDCs, and they're going to try a lot of other stuff, none of which will work. And at the end of the day, it's going to come down to what will people trust. I mean, the reason the monetary system we have works is that people trust it, and it has worked, but it's working less and less and less. And when we get to the point where inflation is just raging, which I believe we are headed there, people are going to say this monetary system does not work. This is not something new in history, although Keynesians would have you believe that history doesn't matter. But Voltaire said it a couple hundred years ago. All fiat money eventually returns to its intrinsic value, zero. Once people realize, hey, this money I've got, it's not going to be worth as much tomorrow, they will do everything they can to spend it on either a good or something they think will be worth more tomorrow. And in my belief is that those two things are going to be gold and Bitcoin. Or frankly, in houses. You see it right now. It's interesting to me that the U.S. housing market this last year was up 25% in 1 year, okay? Right. That was bigger than the housing bubble. The biggest gain in the housing bubble was 14%. Well, why is that? Well, people aren't stupid. They know a house has value. They can live in it. They can borrow at 3% for 30 years and buy a real asset. That's, okay, I'm going to do that. China and Russia have both started immediately. Russia takes dollars for some of the oil they sell. They immediately convert it into gold. Okay. China has started to price oil in yuan. They've got the Saudis taking yuan. Part of what made the dollar so powerful was the petrodollar and the fact that we provided the Saudis security in exchange for them taking only dollars. Right. But that's going away. The Russians have agreed and the Chinese have agreed to help the Saudis with the security issues. So yeah, there are signs. Look, the U.S. empire, sadly, the U.S. empire is leaking. It's like a leaky boat. Now, how quick is it going to sink? I don't know. But it's not. It doesn't look great. I think you start thinking about what are sound money alternatives. Obviously, some people have chosen housing. It's not crazy. Houses will retain their value. You can live in them. I then go to gold and silver coins. I specialize in picking gold and silver mining stocks and have done okay with that. And then I think Bitcoin is an emerging form of sound money that's very important as well. And millennials love it. And I like it too. I'm a very big Bitcoin fan. But I think, you need to move some of your assets into something that provides you with inflation protection. I mean, gold is sound, fabulous, 5,000-year-old money. And gold, I don't think it's ever in a year gone down much more than 20 or 30%. So it's, it's the base, okay? It's the absolute base. It's not going away. 6 billion people know that it's money, okay? And I love gold. I've always loved gold and always will. Having said that, this Bitcoin thing has come along, and, it's in some respects, it's got advantages over gold. Not in every respect, but in some it has advantages over gold. And as a result of that, and it's also got an adoption curve going on where it's being picked up and used more heavily, and that's forcing its price to go up. So, I think to everybody, it's a personal decision. I mean, the only thing I would advise, I think anybody who's 100% Bitcoin is crazy, and I think anybody who's 100% gold is crazy. So let's say, the two boundaries are 90-10, 90-10, right. Then you decide. To me, gold is like what a bond used to be. It's safe, it's boring, it's not going to go up as fast as Bitcoin, but it's not going to have an 85% drawdown. I mean, one of the things that bothers me about some of the Bitcoin people who advocate it is I'm not sure the people they're trying to sell it to understand how volatile it is. And I mean, I have people that I know who in 2017 bought it at $17,000. Fine, they'd be okay today, right. But it went down to 3,500. And of course, they probably thought, well, hey, this is stupid. And they blew it out, which of course is the wrong thing to do. But my point is, not everybody can handle that volatility. And so I think everybody has to pick where they want to be on the curve, right, of risk versus reward. Gold should be $10,000 right now. If you go back and you look at the old monetary, ratios and so forth, gold should easily be $10,000 right now. If you look at Bitcoin, I mean, in my view, Bitcoin could easily be $150,000, $200,000 right now. Look, Bitcoin competes with gold, and I see it, I admit it, it's obvious, but they're different. They each play a slightly different role. To me, Bitcoin really is digital gold. And there's a place in the world for digital gold, but you know what? There's a place in the world for physical gold too. And so they will coexist. And there'll be some ratio, and maybe over time Bitcoin will be, the bigger part of that ratio. But for now, we're still in the early days. I mean, we've got, like I say, we've got 450 trillion looking at 7, right? They're both going to go up. Okay? So gold people should not despair. Gold's going to go up a lot.